first company I want to talk about here today is Hasbro. Now, they're obviously that toy maker. Reason they're interesting here, the shares did trade up after they reported second quarter results that beat analyst expectations. Company earned an adjusted $1.30 per share on revenue of $980.8 million. This is where it's crazy. Analysts were looking for a profit of just 78 cents, so $1.30 versus 78, and then revenue of 880 or $880 million, so $100 million beat on that. So it was a very, very good quarter. They said it was fueled by performance in their Wizards business is what kind of lifted things. So
Wizards, huh? Hasbro. So, you know, household name, you probably heard of it, American Toy Entertainment Company. They've got iconic brands like Monopoly, Transformers, My Little Pony. I know that's a big fan of Chase. Chase really likes that one. Nerf, Play-Doh. But then also back to the Wizards, Magic the Gathering and Dungeons and Dragons are, you know, in that Hasbro umbrella, and they make a lot of money for them.
Yeah, I mean, I know kind of Monopoly is the one that's iconic to me. I mean, I actually got a Monopoly board right behind you right now, the Berkshire Hathaway edition. But as always, let's look at the numbers here to see if Hasbro is a worthwhile investment. I like it too because it's not overly complex. You know, I mean, I don't think toys, entertainment for kids is going to necessarily go anywhere. The question is, will Wizards and Dungeons and Dragons, is that something that will continue to grow in popularity or will it decline in popularity? I know a few years ago, actually, that segment, their Magic segment, hit their stock pretty hard as expectations were way off. So, I mean, I don't know how big of a business that is for them compared to the monopolies, compared to the other kind of nostalgic areas like My Little Pony for me. But would want to understand that breakdown there for sure, as do they have potentially growing assets, growing products that can kind of continue as we progress through time here.
Yeah, I mean, it looks like in 2024 that Wizard segment generated, let's see, over $1 billion. Yeah, Magic the Gathering was over $1 billion. That looks like that's quite a bit bigger than Dungeons and Dragons. That's like $200 to $300 million of revenue. And then the other games account for like 30 to 40% of their revenue. So Magic the Gathering is a really large component of where their revenue comes from.
Do you know anybody that plays Magic the Gathering?
No.
Me either. So
but, I mean,
I don't know if it's popular or not.
I don't know how much a card costs. I mean, $1 billion of revenue from that. I mean, I know that like Pokemon cards and stuff, people buy those things for tons of money. Maybe this is something similar where people really buy a lot. And ultimately, from a business perspective, sell whatever people buy. I mean, who cares?
No, absolutely. Yeah, it just if it was, let's say, 60% of the business, I mean, that could have a large impact. I'm not sure if that's the numbers.
It's about 52% of their Hasbro gaming revenue is Magic the Gathering.
Oh, I'm kind of surprised by that. But let's look at the numbers behind the company. Right now, kind of surprised by this. No price to earnings multiple. There must have been some write-offs or something that impacted that. I do believe they have profitable business lines in the long term. So again, must just be accounting situation there. Price to sales were 2.5. Price to book value, nothing there for the tangible book value. Likely a lot of acquisitions that they've done over time, create a lot of goodwill on the balance sheet. Price to cash flow, 15.2, below the industry of 15.5. PEG ratio going forward is 10. Big reason for that is the estimated growth rate on earnings. Not very impressive here, just 1.5%. I'd like to see, obviously, more growth when buying a business than a long-term earnings growth of 1.5%. Sales over the last 1 year did decline 6.2%. Earnings were flat. So again, kind of curious what's going on there. Is there that catalyst that could turn things around and get Hasbro growing again? That's a big question for an investment thesis in this business. You get a decent dividend, though. Yield is about 3.8%. They do use 91% of their earnings to pay that out. But to me, more importantly, because I think there's some accounting issues, the free cash flow payout ratio is 78.6%. So I think that dividend appears to be safe and stable at this point in time. Definitely disappointed by the balance sheet. Current ratio looks okay at 1.7, but gosh, debt to equity 290%. Definitely above my comfort level at this point in time. Now, looking at the current price for Hasbro, it's $74.63. The 52-week high, wow, $78.83. And I say wow because the low here is $49. Year-to-date return for Hasbro, 36.3%. Definitely done quite well. Long-term, though, not done well. over the last 3 years, up about 7.9%, including dividends. 5-year return 24%, and the 10-year return just 28.7%, all including dividends. So a lot of that growth obviously came with that year-to-date period. Unfortunately, long-term, you held Hasbro not doing well. Now, the question is, going forward, is this a worthwhile investment? I'm going to say it's okay. Reason being, estimated earnings per share, we got to December 2026, $5.06. Gives a target sell price of $84 a share. Again, when I say that current price was, it was somewhere around like 74, I want to say. Not much room for appreciation above it. And I got to say, it wouldn't be a buy because that balance sheet, debt to equity, just not worth it in my opinion.
I also found more about Magic the Gathering.
Let's hear about it.
That 52% number was of the Hasbro gaming segment. So looking at all segments, so total revenue, it's about a quarter of total revenue, which is still a lot. But I was like, 52%. There's no way. There's no way that there's that many people buying those cards. So,
especially with a large company like that.
Yeah, but I mean, still 26% of revenue, because I mean, Transformers, they also license Disney Princess from Disney. I mean, there's some pretty well-known Monopoly. So the fact that a quarter of it is coming from Magic the Gathering, I think that's a pretty niche thing.
Yeah, I would agree with that. So, and again, is that niche growing? That's a big question, especially still at 25% of revenue. Let's say,
yeah.
I mean that's got to be a big weight on that company. They need that to grow to really have a good impact on this business. So, like I said, I was kind of hopeful here. I liked the underlying premise of the business, simplicity, but again, the valuation is meh, and be in the hold category, and the debt just not worthwhile.